Welcome to 2230. For the next few minutes, we're diving into a groundbreaking alternative budget proposal that's shaking up Singapore's economic landscape. Just seconds in, picture a future where long-term reform trumps short-term relief, and where every citizen's voice matters in fiscal decisions. Today, we explore the Singapore Democratic Party's SDP bold alternative budget plan, unveiled just hours ahead of Prime Minister Lawrence Wong's Budget 2025 announcement. This proposal isn't your typical election year handout. It's a detailed blueprint for structural change. The SDP is calling for a gradual increase in the corporate income tax rate to 20%, aligning with the global minimum tax set by the OECD and G20. They argue that this move will level the playing field and boost national revenue. But that's not all. The proposal suggests reducing the GST from 9% to 7%, with a twist. Essentials like rice and infant formula would be exempt, while luxury goods might face higher taxes. This strategic reshuffle is aimed at easing the cost of living for everyday Singaporeans while ensuring a more progressive tax structure. As we delve deeper, notice the SDP's radical approach to housing. Their proposed non-open market (NOM) scheme would price HDB flats based solely on construction and administrative costs, excluding land value. This means that a 5-room build-to-order BTO unit would be capped at 500,000 Singapore dollars, a 4-room at 400,000 Singapore dollars, and a 3-room at 300,000 Singapore dollars, irrespective of location, a significant departure from current pricing. To balance the books, the proposal even suggests having grants for both new and resale buyers. Meanwhile, in the transport sector, the SDP is stirring the pot by advocating for the nationalisation of public land transport. They believe that reinvesting profits from buses and MRT services into improving quality and efficiency could revolutionize our daily commute. They also propose postponing the construction of Changi Airport Terminal 5 until existing terminals are fully utilized, a move aimed at maximizing current infrastructure before expanding further. Healthcare is another cornerstone of this alternative vision. With an allocation of 18 billion Singapore dollars and the creation of a National Health Investment Fund, NHIF, the SDP is pushing for a government-subsidized, single-payer universal healthcare system. This system would cover all citizens and long-term residents, along with significant investment in nursing homes, step-down care facilities, and home care services, measures that could reshape how healthcare is delivered across Singapore. Throughout the proposal, the SDP stresses the need for greater transparency in government spending. They cite examples of what they call waste, like the controversial 880,000 Singapore dollar expenditure on a bin center, and argue that cutting such inefficiencies could fund these transformative policies without relying on short-term handouts. As Singapore stands at a pivotal moment with an election on the horizon, this alternative budget is sparking intense debate. Is this the strategic overhaul we need for long-term growth? Or are these proposals too radical for the current political climate? Drop your thoughts in the comments below. And don't forget to like, share, and subscribe to 2230 for more in-depth coverage and analysis. What do you think? Can structural reform truly pave the way for a brighter future in Singapore?